All right, after you've prepared the sales budget and the cash collections budget, you can then prepare the purchases budget to see how much you need to purchase to support the level of sales that you expect. In this example, we have food costs averaging 30% of each customer's bill. Now, we're going to see here later that this is then a variable cost because the costs will increase as you have more customers. And customers, again, is our quantity in this example. Now, it also mentions here that you're not going to pay all of it in the month you buy it. Only 90% won't get paid in the month you buy it. The remaining 10% will be paid in the following month. All right, how do we figure out the amount? Well, if you recall, we have customer bills that we expect to be $24,000 per month. Again, that was 100 customers at $12 a piece and 20 days a month. So we need to we're going to have to pay approximately 30% of this 24,000 in food costs. So food costs, take the 30% times the 24,000 and you get 7,200. So the amount you would purchase is 7,200. Now I want to just go in and take it a step further, but we're not going to continue with this assumption. But what if you were required to have $100 of food in ending inventory at all times? In other words, you want to make sure you start the next day with $100 in inventory. Well, if you look at it this way, you've got your T account here, food inventory. You start with 0, right? Then what you're going to do is purchase 7,200 because you're going to sell 7,200, but you don't want your ending inventory to be 0, so you're going to have to purchase an additional 100. So in the very first month, the actual amount of purchases, if you require a certain amount in ending inventory, will be 7,300 or 100 higher than, as we'll see in the subsequent months. All right, so then our ending balance in inventory will be 100 at the end of June. So then we get to July, we buy another 7,200, we sell another 7,200, and our ending inventory will still be that 100. So the amount of purchases in July is only 7,200, not 7,300 like it was in June. And this will be the case for all subsequent months until they actually close their business. So that's how you figure out purchases. You take the beginning balance, add your purchases, subtract what you're going to sell, figure out what level you want to have in your inventory, and that will be your purchases for the first month. And then thereafter, all you need for purchases is the amount you need to support that month's sales and only that month's sales.